You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you are doing well on this Tuesday. So following up from yesterday, we are going through my 5 investing rules this week. Folks, 5 most important. Of course, you have all kind of rules, but if I have to narrow down my investment process, it could fit within those 5 rules. The first one was the dividend triangle. I explained how I use 3 financial metrics to pretty much decide if I'm interested in a stock or not. Many times during webinars, I do private webinars for my dividend stocks rock members. And when they ask me a question about, what do you think about Sun Life? What do you think about Alimentation Couche-Tard? What do you think about Dollarama? The first thing I do is I pull out the dividend triangle, because in a second, I can see if the business is doing well or not. And not even by knowing its business model and its growth vectors and the stories that management tells us to convince us actually that the business is going to do well in the future. Instead of just thinking about the future, I just look at the numbers, and the numbers will tell you if the things are doing well or not. It's no matter how you can tell your spouse how great your life is and your budget is under control, well, if she looks at your credit card balance and they're not paid at the end of the month, you can invent that you bought a boat and everything is going well. Well, you're actually not able to pay your debt on time, and that's a pretty big problem, right? So here's the thing. You have the metrics, but there's also another very important thing that you must have when you invest is the comprehension of what you're about to put your money in. So I go with the good old saying from Peter Lynch: know what you own and why you own it. I translate this into having a strong investment thesis. And the investment thesis must be backed by the metrics. So that's today's investing rules: is you have to draft your investment thesis, and then that investment thesis must be backed by financial metrics. To get the full extent of what I'm talking about right now, I want to invite you to download the Dividend Income for Life guide at moosemarkets.com/income. So it's moosemarkets.com/income. In that guide, you will learn all about my investing philosophy, how I build my portfolio, how the low yield, high growth companies are actually not only showing better returns than high yielding stocks, but are safer for retirees. So you can download the guide at moosemarkets.com/income. So the way I look at the investment thesis is the part where I feel confident. I feel confident about a company because I understand what they do, how they do it, and in which kind of environment they will perform, because that is super important. When you see a stock price going up or going down, you can usually explain why by looking at the investment thesis and looking at the financial metrics. So we're lucky at Dividend Stocks Rock. We provide the investment thesis for investors, so at least they have a starting point to draft their own. And the way that we have remodeled our investment thesis as of late is we have a kind of a summary of all the good reasons why you would like to buy a stock, like what's this company is great about, and you can usually get that kind of information by looking at financial statements, thinking about it, looking at investors' presentation, because of course, investors' presentation are done by management team, and the goal is to kind of sell you the business, telling you all the good things. So of course, you have to look at the potential downside, but that's going to be for another episode later on. But for today, we are looking at what that company is doing great. So we have repackaged our way to write down an investment thesis at Dividend Stocks Rock. Well, we are in that process right now because we wanted to make it clearer. So when I draft the investment thesis, I start with a paragraph with the big lines of why this company is so great. And then I will look at 3 different segments. The first one is the business playbook. So how the business is making money, what's his day-to-day activities look like and how they will be able to perform in the future. So that's how they can make money. So that's the playbook. Then you have the growth vectors. The growth vectors are like all the good things that could happen moving forward. Like if they have like any projects into like growing by acquisition, having new projects, being on the market, new products, investing in R&Ds and so on. Those are like the growth vectors. And then there's the moat. The moat is related to the business model. Do that business benefit from any competitive advantage, like long-lasting competitive advantage that will protect their portfolio, their business against competitors, or will at least protect a base business model. So I thought of like sharing one with you quickly. So let's talk about National Bank for a second. So National Bank, I mean, one of the big six large bank. The business is growing by acquisition. They acquired ABA Bank not too long ago in Cambodia. This year they just closed the acquisition of Canadian Western Bank. They are very strong in capital markets and in wealth management as well, and they have a stronghold in Quebec. So that's pretty much investment thesis in a nutshell. Then the playbook. Well, playbook is 50% of the business is classic banking activities. So personal and commercial bankings, mortgages, loans, commercial loans, and so on. So that's how they make their business day to day. 50% of that is coming from classic banking activities. The other 50% is split between wealth management. Private banking, 1859 is like one of the strongest brand in wealth management. So very strong in providing services to high net worth client, and of course with them, well, it's a sticky business. They're making money by charging fees on assets under management. So when the market is going up, they're going to make more money as well. They are very strong in capital markets as well. They are creating new products on the market, and this is how they make money. And finally, they have also the diversification into international and US with ABA Bank in Cambodia and Credigy in the United States. So that's the playbook. The growth vectors, well, there is a lot of growth to be done in wealth management and capital markets. Huge transfers of wealth there. They are growing by acquisition as well, as I just mentioned in the investment thesis. The acquisition of Canadian Western Bank will open the door to more cross-selling, more synergies. So that is looking very good. ABA Bank is doing incredibly well in Cambodia, so that's another growth vectors. So they have plenty of growth vectors around. The economic moat here, well, obviously, National Bank is operating in oligopoly in Canada. They're some kind of like protected, like half of their business, that is like the classic banking activities in Canada, very, very well protected by federal regulation. So that's pretty much their like main advantage. They also benefit from this big brand in Quebec. So that's also another thing that could help them protect against competitors. So that's the investment thesis for National Bank. But here's the thing. That's a story. I'm telling you a compelling story how the business is doing great, and it's going to continue to do great for years, right? But what if I look at the dividend triangle at this point? So what if I try to match my investment thesis with metrics? Well, if I look at the dividend triangle at National Bank, it's actually pretty solid. I see the revenues growing, the earnings per share is growing. 5 years growth rate for revenue is like 9%. And for the earnings is 11%. So the company is growing very fast. The dividend growth is very generous. We're talking about double digit right now, but mostly because there was a huge jump in 2021 to 2022. Usually you can count on like high single digit for that. So the dividend triangle right now is almost perfect. The investment thesis is very strong. So am I really worried that the stock price is going down since the past earnings? Definitely not. It doesn't tell me anything. But what if at one point the dividend triangle starts to slow? If the company is starting to have problems growing their revenue and their earnings are going down because they have like higher PCLs, and I see dividend growth rate of like 3% or 2%. Oh, we're going to take a break for a year. Well, then it's going to tell me it's not doing great. So it will also give me a sign that it will have to be sold at one point. Of course, you have to be patient. And I usually take like 2 to 3 years for a great companies like this. I will take 2 to 3 years to see if the dividend triangle can get back on track and to see what management does. But that is going to tell me, it's going to help me a lot making a decision. I learned that because I made that big mistakes with Algonquin a few years ago. I've put too much emphasis on the thesis, so all the great reason why this company should do well, and not enough on financial metrics. And when the thesis is great, you fall in love in the stock. You're really confident, so that's great. But then if your confidence is placed in a place where there's no financial metrics to back it up, so you're just telling yourself a good old fairy tales and you have no solid ground on it behind it, well, then there's a big problem, and that opens the door to making mistakes and losing money. So from now on, I always make sure that I have a very strong investment thesis and a very strong dividend triangle. And if one of the two is not there, I just don't invest. I set up a time frame, I look at it, and then boom, I get rid of this at as fast as possible whenever the metrics are starting to go down. That is like super important, and it helps me to make decisions faster. Again, if you want to know more about my investment philosophy, I invite you to download the Dividend Income for Life guide. It's 100% free, and it's a great summary of how I invest. You can find it at moosemarkets.com/income. And tomorrow we are going to talk about selling rules and diversification rules. So that's going to be another big episode. Make sure to not miss it. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.